Good afternoon, welcome to GrainTV. It's January 7th, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down a relatively quiet but weekday in Chicago on a Tuesday. Jumping into the quotes here, we see March corn down 1 3/4, soybeans off 3/4 cent, Chicago wheat down 3 1/4 there, and Kansas City wheat showing a little bit of respective strength, up 1 1/4. Getting the session started today was a good export sale of U.S. soybeans to China for 350,000 tons here for the current marketing year. So that did a little bit to support soybeans early in the trade, really tailed off though toward the end. And in corn right now, we continue to see the dried distilled grain story kind of dominate trade talk.
Yeah, absolutely. You know, that DDG story really put a hurting on soybeans simply because it's a competitor with that soy meal.
Right.
Now, one of the things that's interesting is that soybeans was able to find a bottom here. And I think that it's able to find a bottom because we actually see a little bit of an improvement here in the last week when it comes to the overall DDGs passing through customs and into China. Now, last week, only about 20 to 25% of DDGs were passing through customs into China.
Yeah.
This week, that number improved to around 40 to 50%, and we're expecting improvement again next week. The bottom line here is that has definitely impacted the actual price for DDGs at these export markets. We've seen kind of a recovery from the overall panic that we saw at the end of December, and really we saw on Monday about a 5% increase in those DDG numbers at export markets.
Yeah, you know, Cody, and this really is not just an export story. Take a look here at this chart. It does kind of a good job of detailing the price of 10% moisture dried distilled grain in eastern Iowa, and you can see here quite a dramatic decline in prices there, around about 18%, following the announcement of Chinese rejection. So as you said at the beginning of the show, it's an important story here for soy meal demand, but I think for the corn market, the real focus is on what is a decline in the price of these DDGs going to do to the ethanol crush margin moving forward. We've seen it back off quite a bit, and that's kind of a focus right now of the corn market as we approach Friday's USDA WISE report. Right now, I think for the USDA, it's going to be a pretty challenging task to accurately predict how much ethanol is going to be produced here in the coming year, just based on this DDG story being, these continuing rejections by the Chinese, plus domestic legislation to actually scale back the ethanol mandate. So you combine all those, I think ethanol production could be an interesting balance sheet item to watch in Friday's report.
Yeah, it definitely will be something that traders will be watching, but really the one number that kind of rules them all and will be watched very closely is ending stocks. And what you can see here is that analyst expectations on average is around expecting corn to come out with about 70 million bushel increase in ending stocks compared to that December number.
Yeah.
For soybeans, it's not so dramatic here, only expecting a 1 million bushel fall, and for wheat, we're expecting about an 18 million bushel drop in ending stocks here for that January report compared to December.
Yeah, you know, one big mover that we're going to see in Friday's report, or one big potential mover, is the production for corn and soybeans. That is something that the USDA hasn't modified here in a while, and we're going to be getting a crop production report on Friday. On average, analysts are looking for 77 million bushels added to the corn production from 13-14, and about 22 million bushels added to soybeans. So this corn number, I think in large part, is due to that increased production. There's a couple areas that could come from. We could see better yield than we saw back in the November report, or we could see raised harvested acreage expectations. So that's something to keep an eye on, and we'll help break down those expectations in more detail as we move through the week. Additionally, on Friday, we're going to be getting the quarterly grain stocks report. That's something not to be ignored. That's really going to help us really gauge the disappearance of corn here over the last quarter and put a good estimate on feed usage. So we're going to be breaking down those numbers in detail tomorrow and Thursday on GrainTV. In general, though, that kind of wraps up what we saw here on a Tuesday. Thanks a lot for joining us. We'll see you tomorrow.